Well, welcome back to a market closing live stream. All right. What the heck is going on? It's kind of like, is this going back to normal? Are we good? Like, everything okay here? Because we got some green today, okay? It's supposed to be quadruple witching day. And what did we say yesterday? Quadruple witching day is a lot of volatility, but not really seeing the volatility. By volatility, they mean staircase up. That's kind of what we're seeing today. And it kind of makes me wonder, like, well, will we be watchful for next week? Or is this just setting up for a really nice tendy next week? I don't know. We'll see. Let's take a look at the sticks here. We got about 13 minutes to the close. Look at this. MP Materials up 12%. Why? Why did I not buy them this morning? I don't know. I talked them up so much yesterday. Maybe it's because I still don't know enough about the company. But golly, MP Materials crushed it yesterday. Just absolutely crushed it yesterday with their earnings. Explosive growth in the last quarter of 2020. And this company deserves this. Like, boom, this is freaking amazing. Let's see. Alex Cutler, what's up on Twitter? Yeah, no freaking kidding, man. Alex Cutler, freaking awesome research you do. It says here, people didn't know what they talked about when it came to witching. I think people hear witch and they're like, oh my god, witches are bad. Like, I think that's the extent of research into witching day, because it's like, folks, it ain't that freaking big of a deal. Now, I will say, pretty glad we bought some stocks this morning, because you watched me live transfer some money over to Robinhood and go immediately spend that money and go back into margin over at the Robinhood. We bought some stocks this morning, hit that dip this morning. We didn't end up seeing that dip come back again throughout the rest of the day. In fact, a lot of the stuff just went pretty green here today. MP Materials, Williams-Sonoma staying up. Upstart up another 7.5% after basically doubling. It's crazy. And by basically doubling, I mean doubling. DraftKings, 7%. Playboy's up 6%. Everything's just going up now. We've got FedEx is up. The Dollar General's up. We've got FTCV's up. That's eToro. The Dollar General. Plug Power's up. NEO's up. NEO's still under $45, though. Still cheap here, right? So we're not like, certainly not back to the levels we saw in early February. There's still a lot of pain. So even though you might be seeing some green in the portfolio today, look, there still might be some opportunities to go hunting around a little bit here, because some of the numbers are still a little bit depressed. I mean, look at ACIC. Are you kidding me? $10.66. That's sitting right next to the SPAC value at $10. That's dirt freaking cheap. Let's zoom out here for a moment on the day here. Look at this. Here it is, basically pre-announcement. Oh my gosh. Then we get the ACIC merger announcement, and the freaking thing goes whoop, runs all the way up to, what is that, 1860 intraday? The thing's right back to where it started. Even though it's up 3% today, this thing has gotten spanked and hard and painfully. It sucks. Now, I'm not in it, just saying. If you wanted to pick up an eVTOL company here, Archer is the merger with ACIC. The thing's basically at what the PIPE investors are paying for it. Lemonade at $100, still a little on the pricey side. ARK Invest coming back with some gains today, 1.5% to 2%. Palantir's up 1.8%, but still, Palantir, dirt cheap. Under $25 a share. Yesterday, we spent a good amount of time in the private Discord and private chats that we have talking about just the incredible reach that Palantir has, not just for policing, surveillance, terrorism, even local policing, like the Palantir Project with LAPD and how they've rebranded it, but yet they're still using it. It's absolutely incredible. And I mean, that's not even to mention the logistical power. Palantir has such a phenomenal platform. Snowflake, nice sell-off, obviously, since IPO. Below IPO price here. So you want to get in on these big data plays. It's below IPO price. On IPO day, what did we close for? We closed for $262. That's crazy. We ran up to 319 on IPO. Of course, we've had some euphoric moments here around December, but everything was euphoric between November, December, and January. It really wasn't until the end of January, middle of February that we started getting some bumps in the road. If we go out to all stocks here, let's see what's leading losses today. We've got Visa down 5.3% at Visa here. Nike down 3% after earnings. We've got JP Morgan and the banks, Wells Fargo, JPM down 2.5%. Honestly, this is like shrugging off, which I posted a video about this. If you want to learn more about what the Fed did with the banks, watch that video. We're not going to rediscuss that here. ChargePoint continues to sell off here after their miss on Rev. Like, why is their rev declining? Yeah, we had a pandemic, but that doesn't mean you can't go install charging infrastructure. So definitely something to look into if you're an investor in ChargePoint or you're considering adding to ChargePoint. You better become an expert on what the heck is going on at ChargePoint and why we saw that negative, what kind of growth we're expecting to see, are margins going to compress or improve? All very, very important. Got Tattooed Chef at $20.87 here. Relatively inexpensive. If this fell under 20, that's going to start looking juicy again under 20. I sold the thing at like 24.50. I think there are better opportunities from what it was at 24.50. Send out an alert, of course, when I sold it to all the members in the stocks group. But anyway, that's neither here nor there right now. We want to look at opportunities now going forward. We've got, still, even though these guys are red right now, like the Wins, the Starbucks, these guys, they're pricey, in my opinion. I mean, they've just had such a wonderful run up since almost September. Woo! A little pricey. Look at this though. Tesla was down. I mean, how low was Tesla today? Like 620 or so? How low did we get? 620, 630? Let's go intraday here on Tesla. We went low on Tesla. Today, we hit a low of, this morning, we were streaming while it was happening, 624 on Tesla today. Bought the thing right around here at 630. Couldn't get the money transferred enough on Robinhood or fast enough to make it happen. And Robinhood's pretty fast. Didn't perfectly get the bottom, but did some buying over there. So that's good. We're covering here. Really kind of rallying into the close here. The market's really shrugging off this. Oh my gosh, Tesla just went positive. Look at that. So here I am talking about it and just green candlesticked into positive territory. Jeez, just this morning, I'm like, for every percent you see Tesla down, you'll just go buy 100K for Kevin. Like when it was down like almost 4%, we're like, oh man. Yeah. Woo. Oh yeah. But look at it. Now it's almost up 0.5%. We're rallying into the close. What kind of emotional dumb market is this? This is stupid. See, we've broken the bond connection again. And this is what happens. We get a spike, the market panics and sells off on the spike. Then it stays up, and then the stock market comes roaring back. It's like, okay, the spike happened. What are we going to do now? Tesla looks kind of cheap. Why don't we just dump a bunch of money into Tesla? Honestly, right here, that could be like ARK Invest going buy, right? Seriously, it could be as simple as that. The ETF's coming in and buying right here, right before the end of the day. You've got EXPI back up 8% today. I mean, it was ridiculous, the stupid sell-off it had yesterday. Way oversold to go under $50 a share. What a joke. For what? Even Gevo, even though I'm not the biggest fan of Gevo, way oversold yesterday. And look at this run that we're getting here right at the close, folks. This is quadruple witching day happening for you right here. And it's not a witch, it's a tendy deliverer. It's a tendy on a broomstick. That's what quadruple witching day is today. It's people going, well, things just got cheap. Let's double down on this stuff and open up some new contracts because let's go. This is crazy. Look at this. It's just all the last 10 minutes here. This is the optionality happening here. Contracts. I mean, this is nuts. AMC's flat. Somebody shouted it out, but I don't see anything going on over here. MP Materials actually closing or sort of falling into the close a little bit here. G-Tech, loved my interview with the CEO. Luminaire running today. Not exactly sure why. What the news here is on LAZR. They had earnings, but they weren't like necessarily impressive. Let's see here. Let's pop it into the terminal here. We got 4 minutes till the closing bell. Laser US equity. Let's go ahead and pull it up. Okay, what do I have here? So, okay, let's go to individual news. Okay, so what do we got here? Luminar jumps after announcing SAIC tie-up. Okay. What? Is MViz running too in the other ones? Announced a strategic, SAIC Motor, one of China's largest automakers. SAIC plans to use LiDAR sensors and software made by Luminar Technology. Ooh, that's pretty good. Expected to start series production in 2022. Well, there you go. Okay, good. Good news in the LiDAR space. Again, kind of giving the finger to Mr. Elon Musk about, we don't need LiDAR, says Elon. Well, everybody else in the world's using LiDAR. As a big Tesla investor, it's the biggest holding. It partly does a little bit make me nervous. But the good news is Elon could always just turn around and buy Microvision, and nobody would even notice it in the balance sheet. Relative, obviously, for Tesla, just gobble them up. But anyway, what else do we have here? So EXPI running Microvision, also running along with this LiDAR news here. So exciting. Good. What else do we have here? Let's go to the 30-minute chart here. Yeah, okay. So what else do we have? Upstart. Oh, Upstart rallying into the close as well. So let's go back to the minute. Yep. Nice rally into the close here. There's that volume. Here it comes. There's that witching, and it is tendy delivery. That's all it is. Except for Visa. Visa, on the other hand, getting wrecked. Just getting decimated here in the after hours. We've got 2 minutes to go to the closing bell. Let's see what Enphase is doing. That's a good question. Even JP Morgan rallying into the close here. Enphase up 4%. Final freaking Lee. Let's get some more positivity over here. I'm telling you, this is why I keep saying it's going to be this whole bond crap. It's going to be rip the bandage off, and then the market's going to go, oh, ow, that hurt me. And we get a sell-off. And why do you want to hold? Why do you want to buy the freaking dip like the sweater says? Because after all the owie, and all the pain, the entire market's going to go, wait a second. Let's go buy everything. It's ridiculous. It's just ridiculous. There's what we have right now, folks. The market we are in, and just this culture that we're in right now is everybody is chasing yield. Everyone is chasing returns. We want tendies. Everyone wants the tendies right now. Duh. But you can't get tendies if you're not in the market. You got to be in this market. You can't be sitting this market out. Now, are we going to get some more volatility? Heck yeah. Are we going to see some more bloody days? Oh yeah. And what are we going to do on those red days, folks? It's really simple. You take a little bit of money, and what do? Here we go. Come on. Push it. Find the dip. Yup. Over and over again. And you keep averaging in.
Performers after the Fed move today, and energy is rebounding after a very tough week where the sector was down 7.5%. The NASDAQ and this Russell 2000 both rebounding today, a little less than 1%, but both lower for the week, especially small caps closing lower 2.6% or so. For the NASDAQ, down for the week, little less than 1%, fourth down week in the last 5, Wilfred.
Yes, and the close a little bit lower for the S&P 500. Welcome to the closing bell, everyone. I'm Wilfred Frost, along with Sarah Eisen and Mike Santoli, CBC senior markets commentator. S&P closing down 6 basis points, just slipping into the red as we approach the close. You can see that final 15 minutes or so of trade there for the Dow, fairly negative. The Dow closing down 233 points, or 0.7%. The NASDAQ up 0.75%. All three of the major averages were lower, though, for the week, largely because of yesterday's selling. Communication services consumer discretionary. The best two sectors today, the worst, real estate and financials. Coming up, the CEO of Robinhood rival Webull on the retail investor revolution and whether stimulus checks will lead to an increase in trading activity. Jason Snipe from Odyssey Capital Advisors still with us, and Gina Sanchez, Chief Market Strategist at Lido Advisors, joins the conversation. Mike Santoli, first to you, and just that final 15, 20 minutes taking the S&P.
Wait a second. We're going to get the Webull CEO coming on. That's exciting. So Webull CEO is going to be on CNBC here. We'll have to check them out. Remember, Webull, folks, is literally what we're using right here. And you too could use this platform by going to metkevin.com/Webull, sign up, deposit $100, and they'll give you 2 totally free stocks worth up to $1,850. Which that's interesting that the CEO is going to be coming on. It's also kind of exciting. So okay, let's see how things closed here. So MP Materials got to 13.53%, and they are pretty consistent here so far in the first 2 minutes of after hours. We've got let's see. Let's go to all stocks here. There we go. Whoa, look at Gevo up 18%, trying to give up a little bit of the love here right into the close. Could have closed probably 20% up, down about 1% now in the after hours. Luminar on that new deal with the Chinese vehicle manufacturer up 16.58% after hours, giving back 0.25%. We've got Microvision also giving up about 0.5%, but that's nothing to that 8.85% gain we had today. EXPI did drop 14% yesterday, but gave us a fat 8% back today. Obviously, still down, but the growth is here to stay. We've got XPeng, and that doesn't mean the volatility won't be here, because volatility is, it's going to be here, all right. But anyway, I can't believe XPeng got down to 25 at one point. Bought some XPeng options towards the bottom over here. I think it was like $26. So those are printing some tendies right now. But anyway, always nice to dollar cost average into some of these big discounts. But I mean, look at even XPeng here, just relative for a moment. Look at how high XPeng got for a moment. It ran up under this. There was like this insane euphoric period of EV hype on YouTube. And everybody's like, oh my gosh, EV everything. Like, where are they all now? Like, everybody, no, all the EV now people are elsewhere. I don't know where. And they've created some awesome opportunities here to get into some of these great companies cheap, in my opinion. Anyway, Plug Power up 5 and a bit, Peloton 5 and a bit, Nordic American Tankers up 5.65%, Pinterest up 5.2%, back over 70. We are now over 70, or at $73, slightly above in the after hours. Roblox back to 70. Did fall. I don't think we got to IPO pricing again there. I think we had to get under 66 to see that. And this morning, I don't think we got there. We got to 68 this morning. So Roblox actually holding steady here with the valuation they got. I mean, good for Roblox. Enphase pushing up as well. Nikola, Target, Beyond Meat, all coming up 4% today. We do have a weekend ahead of us, folks, which sometimes the weekend can be a little boring. You know, we don't get to hang out for the market open and close, but it's a good time to, what I always like to say is, do your DD, your due diligence on weekends. Best time to study, best time to research, best time to learn is on the weekends. Catch up, plan your trades for next week. We got Tattooed Chef down 1.56%. FRX, ouch, down at 1062 now. Possibly, this company, I mean, look, remember, it's going to be like a Peloton trade. Even though people see it as competitor to Peloton, it's still going to trade like Peloton. I'm just glad, the closer we can get this thing to 10, the better, right? I mean, that's what your pipe investors are playing. Really sets you up, in my opinion, for some nice returns in the future, especially as we get closer to a merger. At a 1062, I think this thing's a freaking bargain, especially the hype cycle that it went through. But this is why I don't like buying into the hype cycles. I mean, unless you're perfect, which none of us are, you run into these hype cycles. Good luck trying to time it perfectly. And if you did, congratulations. But I don't mind that I got into this. I got into this actually about 30 cents higher, about 1090. This thing runs back to 15, 20 bucks. Hey, maybe there's an opportunity to just take a nice double tendy and get out of there. 50% or double tendy, no problem. And I am patient for the SPAC rotation to come back, because it will, because it always does. Disney 191 down a little bit. Really just the recovery sector here down. The Walgreens, the Delta. But look, these companies have been crushing it. Just the entire industry. You could throw a dart and you could be right in the recovery sector even 6 months ago, even 3 months ago, you could throw in a dart and put right on the recovery sector. So you really have that. You really got to weigh out now. At what point do you consider personally transitioning from some of these recovery sectors on over to maybe some of these relatively discounted techie sectors? Now, I say relatively because, look, let's be clear. They're all still selling for high valuations. Roblox is still selling for a high valuation. Tesla is still selling for a high valuation. So you got to figure that out. But remember, the reason companies sell for a high valuation is because they have the expectation of the greatest amount of future earnings and future growth, right? The market's trying to price as much of that in. And so to really win, you've got to beat the market's expectations. So let's see here. Yeah, the EXPI alternate. Oh, earnings are next week? No, there's another one that's reporting earnings today. I think we've got, let's see here. I think it's RIA XF is reporting today. That's another competitor to EXPI. RIA X, but so far EXPI's got like, it's got that first mover advantage. Like if you're going to join one of these, why would you not join EXPI? Why would you not get the stock benefits of joining EXPI? Stock that's crushing it, right? Yeah. Okay, let's see here. Let's see if we got the earnings. Oops, I went to filings. I actually want to go to the news page. Although I could probably go there too. All right. Yeah. Brian, I think that's an interesting argument you're making there. Okay, so they actually reported this morning. Oh, okay. Well, fine then. So this company, OTC stock, reported earnings this morning. This is a potential competitor here to EXPI, up 2% in the day here. No after-hours trading on this one. Announces 2020 financial results. Let's see what they announced. So they had 78% growth. Look, anytime you hear somebody say, oh my gosh, something grew 78%, that's almost 2x. I want to train y'all, okay? What is the first thing you say after that? Off what number? Okay? Because look, if you grew 78% from what, $3 million or $3.5 million or $4 million, whatever it was, it looks like it's probably going to be close to like $3.94 million, something like that. That ain't that big of a deal. Like, it's literally like, yay, I made twice as much money this year as last year. Oh, how much money did you make last year? Last year I made $10,000. Bro. Like, yay, 100% increase. It's not that big of a freaking deal. So be careful when you see this. Usually it's big marketing. Be careful about that. And people, right, I see that all the time on YouTube. So just be careful when you're watching the YouTube videos. Be critical of percent gains. Now, look, if Apple tells me our iPhone sales are up 30%, I don't even have to ask what the number is. I know that's huge. That is a huge freaking number, right? Because that's an established product with massive revenues. And as you get to the larger numbers, the law of large numbers comes in, and it becomes harder to compound up and away. Okay, so annual revenue in 2020 increased. Here's a small number, 5%, 16.6 million compared to. What really matters here is how many agents they have. So their agent count grew to 1,475 agents at the end of 2020 from 997. The problem with this is, remember this, folks. Yeah, counting gimmicks. That's exactly it. So the thing that's very important to be aware of when it comes to these competitors to EXPI is it's exponential, folks. It's an exponential curve. When EXPI goes from 30,000 agents to 40,000 agents, that's 40,000 people out there going, oh my gosh, join EXPI, join EXPI, join EXPI, join EXPI. Because remember, it's an MLM structure, not a Ponzi scheme, MLM structure. And that's the first mover advantage in an MLM structure. Ooh, that's where the dollars is. That's the dollars. All right. So looks like Webull's coming up in just a moment. The Webull CEO will be on. We got a commercial here on CNBC, so we will watch that when it comes up. We've got the 5-year. Let's go zoom in a little bit to the 3-day here on the 5-year while I take a sip of, why not? Nothing like a monster. Woo! Reminds me of the days of World of Warcraft. Do I have a? Oh, we need to get like a. We need a like a World of Warcraft like. You know, I really gotta get the soundboard down because this morning we had a really good suggestion that we need the air raid horn. You know, this one, right? Like, oh crap! It's time to buy the dip. Buy the dip, right? Right. We need that, but I think we also need like TC interest. You know, something like. Yeah, here we go. Like something like this. Let's just fast forward. No, like this. Yeah. Wait for it.
You are not prepared.
Right? That's what we need. We need a clip of that. The you are not prepared, right? That's exactly what we need, okay? I got to clip these things. I got to get better at these. But that's what then we got to put all of that together. The air raid, you are not prepared, and buy the dip. And the bullet sounds everything. That's it. We're getting a keyboard. You heard it here first. I'm getting a keyboard, and we are going to do it. That's right. You know what I'm going to turn into? And it'll be freaking awesome. Watch this guy. I'm sure you've seen it. And then I gotta get back to CNBC here in the States, obviously. But this guy, this is freaking awesome. Who's seen this guy? Please shout out if you've seen this guy. It's freaking awesome. Really quick. Okay, shout out to this guy right here. How to Funk Guy.
Oh, it's impossible for me not to
Watch
fall
this,
in
straight.
love with you, baby.
Love it.
Yeah.
This is me in 3 months. Let's go. Okay, so I was actually looking at those MPKs. So good to see you have a recommendation for that. All right, yeah, and I got to get the robe and everything, and it's gonna say the robe's gonna say buy the dip. Okay, so anyway, where were we? Okay, the yields are doing nothing. Big old boring nothing. Oh, here he is.
Investing in the stock market or getting involved in the U.S. capital markets. And then we had the second obvious wave, which was COVID. People had more time. People had more time to learn about the markets, to actually open up that brokerage account that maybe they've been putting off for years. And of course, entertainment wasn't around, right? There wasn't any sports books anymore. There wasn't gambling. So the one thing that remained open was the stock market. And of course, you also had every night people would come home and see new all-time highs in the market, a very, very aggressive Fed policy, and stimulus packages that just threw fuel on the fire. And then ultimately, I think the third was that kind of culmination of social media and investing that culminated in the GameStop scenario on January 28th.
And so is it all here to stay, or when a couple of those factors change in direction, which they inevitably will, whether that's the market pulling back and people experiencing serious losses for the first time, or of course, hopefully economic reopening so that we have other things to fill our time with, will retail engagement in the market decline at those moments?
Yeah, we may see a little bit of a decline and maybe a little pullback in engagement and activity. But what we will have gained is a now new educated young America in terms of how the capital markets work and how the financial system works. So they can be smarter about the financial decisions that they make going forward. So
now we're educated in how the suits screw us.
For everyone.
So what are your numbers like right now? And how much did you benefit, if at all, from the Robinhood debacle when they had to restrict trading?
They benefited a lot. And make sure to get your $200 or up to $1,850 for free with Webull by going to betkevin.com/Webull.
Aggressively for the last several years. It just wasn't, one event that we became, a player, I guess, in the world of retail trading. This has been ongoing. We've been working hard at acquiring customers. And we found that where we position ourselves in the market is we're a bit more sophisticated in how we present our analytics, our charts, and our platform. So we take a lot of customers, like you've mentioned, from Robinhood that are looking for a bit more engagement. They're looking for a bit more data so they can make a better decision when they actually trade or make an investment. So this has been going on for a while, but no doubt, did we see a huge jump in users when different brokers put on restrictions on specific names or brokers went down. Those are all big tailwinds for us.
What's your view on crypto and Bitcoin specifically, and how engaged are your customers with it?
Well, we've been really fortunate with timing. We opened up crypto trading in mid-November of this year, and Bitcoin at that point was about 17,000. So timing is very, very key in everything you do. So we've been really fortunate. We've seen a huge uptick in customers opening up crypto accounts on our platform. We're well above 1 million accounts right now. And we're looking forward to adding new product and adding new cryptocurrencies for our customers to invest in.
Anthony, what about the risk factor, if at all, being owned by a Chinese company? And you're a Chinese company and expanding aggressively in America, where
called them out.
I don't know, consumers could be concerned about their data going to China, going to the Chinese government, about all sorts of cybersecurity risks, not to mention the geopolitical clash that is on full display right now between the U.S. and China, and a potential crackdown on Chinese financial companies in the U.S.
Yeah, Sarah, I'm glad you brought that up. So Webull Financial is a U.S. broker-dealer. We are a U.S. company. We're registered by the SEC and FINRA. Right, so our customers' information in the U.S. is based in the U.S. It does not leave the U.S. Right, our Chinese parent company is a technology company. They do not run the broker-dealer. The broker-dealer is run here in the U.S. And our broker-dealer, Webull Financial, is cleared through a company in the U.S. called Apex Clearing. So essentially, our customer accounts are actually held at a U.S. clearing firm called Apex Clearing, based in Dallas, Texas. So not one customer account is based in China. Not one piece of information is going to China in any sort of way. So it's a little bit of miscommunication there. We are a U.S.-based company.
I wanted to end, Anthony, by kind of pivoting back a little bit to a topic we touched on earlier, which is what's going to happen as and when significant losses are experienced by all the sort of people that, as you said, were
Sarah, don't play.
Market only over the last year or so, when markets have only risen. First part to the question is, who's responsible for those losses? Do you expect to have quite a backlash as and when it happens? And what will it do to engagement and market levels overall?
Well, we're very clear that all investments, whether they're securitized or crypto-based, have risks and deep risks. And we make that very clear to our customers. And I mentioned before, the education that our users get out of this experience of learning to invest. So if the market does pull back and you do see some losses happen, yes, they walk away with a bit of change out of their pocket, but they get to have an education through experience that they would never have had through school or university. And there's nothing better than experiential knowledge. So yeah, that is a risk, and investors need to know the risks when they get involved in the markets.
Really quickly, Anthony, are you seeing stimulus checks flow into stock accounts? Is that happening?
Go, Sarah, get them.
We have seen an uptick in deposits for sure. There's definitely a pretty substantial increase in the amount of activity that we've been seeing during this whole stimulus download over the last week and a half. It remains to be seen how that kind of plays out, but it certainly has risen the tide for all ships in the brokerage industry. Absolutely.
Wow. Anthony, thanks so much for joining us. Good to see you.
Good to see you. Happy Friday.
Likewise.
Sarah coming in feisty with the China question, but honestly, a lot of people have that question. It's a very good question, and I think that's exactly why they asked it, because a lot of people have that question. Which, if you are interested in using Webull, make sure to go to mckevin.com/Webull. What is this breaking news? Let's listen to this.
Meeting, trying to hammer out some of those differences. First, real high-level, significant negotiations between the two sides. The Chinese side just walked out of that hotel negotiating room without saying anything to the press. The U.S. side, though, the Secretary of State and National Security Advisor, both making a few brief comments. The Secretary of State saying here that they certainly knew going in that this was going to be tricky. He said that there are some areas where the United States and China are just fundamentally at odds. He cites Hong Kong, Taiwan, Tibet, and actions that the Chinese have taken in cyberspace as some of those areas where they're just not seeing eye to eye in these negotiations. He says it's no surprise that when you raise those concerns, you get a defensive response. On trade, he says they're going to continue to move forward in a way that fully advances and protects U.S. workers. So the United States signaling to China they're not backing down there, saying we wanted to share specific concerns we have about a number of actions China has taken and we did that. We also heard from the national.
All right. So a lot of banter here about China. Let's quickly jump on over here. Let's see what's going on in the top news. So top news featured stories on the Bloomberg terminal. The suit terminal. The suits say tech rises as treasury yields retreat from peak. BlackRock Fidelity entrants will work remotely. Nobody cares. Treasury's bull market that began in 1981 has finally ended. Okay. NASDAQ 100. Let's see. Okay. LIBOR gets a boost. Okay. No exciting news over here. We've got the 5-year right now at 0.88. We've got the 10-year at 1.73 roughly. Let's go pull stocks. So let's see Webull. Here it is. Let's look at let's just sort by after hour here and see what we got. Keep in mind, this is a Webull. We just saw the Webull CEO, which if you do want to sign up for this platform, it is what I use. I've got way too much in margin over here. I think I'll get my phone and we'll pull it up. I don't even know where my phone is. Never mind. I can't get my phone if I don't know where the darn thing is. But oh well, doesn't matter. So let's go ahead and sort the after hours here. Oh wow, Yelp. Oh my gosh, I remember Yelp sitting at $19 for a while. This is why I was saying, like, you could have bought any recovery stock. It would have taken like no skill, which is kind of cool because it's just like throw a dart basically. And I'm not trying to take away from anybody's games. I'm just saying, like, it's awesome. Like Yelp went from like 19, sat at 23 forever, and shut up. And now it's at the downside of multiple Siri devices. Now it's up to $43, just incredible. Upwork, $46. This thing ran up to $65 after earnings. Really incredible. And why would the brokerage force liquidate your call options before the close, anyone? Usually, force liquidating options before the close would be because you are getting exposed too much to margin, and they're trying to take any possible equity from you. Especially if you have short-term options, because your equity can evaporate. Like, boom, your equity can be gone with options. So why you be careful with the short-term options. Like most options you can't leverage against, right? But let's say you have stock that's plummeting and you're in margin on that stock, they'll liquidate your options to cover that. They'll take whatever they can from you. Like, that's why margin is so dangerous, especially if you're you're playing the short-term short-term options trades. Gotta be careful on those. So Purple at 32, AMC down about 2.8%, Purple down a little bit, Matterport down 1.8, not sure why. Luminar giving up about 1% after being up 16.5%, so nothing drop in the bucket here. That would be expected. CRISPR sitting at 128. Let's see where CRISPR is relatively here. Let's see, CRISPR, pretty cheap here relative, right? Just looking at the chart, right? But we're looking at December pricing here. Of course, that's not fundamental analysis. That's just looking at the freaking chart and seeing, I'd rather buy here than there. So what else is doing pretty cheap? The vaccine stocks are actually doing good. Yep. See, we don't have that kind of that U shape. That upside down U shape on some of these, like the Moderna, I think Pfizer probably as well. They seem to track relatively similarly. Affirm, though, you do. And I'd rather be picking amongst these big sell-off companies for adding. So, like, if you're thinking about adding to your portfolio over this weekend, you're going to come up with some ideas. Yeah, it really not a bad idea for you to look into some of these companies that have just gotten destroyed. Look into Affirm. Look into Lordstown Motors. Let's see what that one's doing. Let's pull that one up here. Lordstown up 2% on the day, but down about 1/3% here. But I mean, look at the stock. It's just a disaster. I mean, you're really getting it for August pricing when the thing really first came on the scene as a public option to invest in. So, Palantir up almost 2% in the after hours here. Palantir doing a nice little run. Darden running. Kappa running off that. See, Kappa ran and touched that like $10.90 threshold, kind of where like FRX is now. And now it's at like 13. I expect most SPACs to do that. That's why 1073, I think this FRX here is very oversold, but it's fine with me. So let's see. Shift Technology 886, nothing special here. Upstart, nothing special in the after hours, up 8% on the day. We've got Redfin, 72, certainly a lot cheaper than it has been. But otherwise, pretty consistent stocks here. AMC, the one pushing down. What's this market dashboard they're going to talk about over here? Let's see what this is.
We've talked about the huge inflows into equity funds. That seems like there's a lot of excitement over stocks. Other indicators, maybe a little more mixed. This is Bank of America's Bull Bear indicator. It's based on a lot of real market behaviors, not just what people say they feel, things like credit markets and flows and volatility. And you see it's been building toward what they consider to be excessive bullish levels, but not yet there. And it's actually hesitated for a while. It's somewhat comparable to coming off those deep lows in 2016 and then hesitating a little bit in late 2017. So in other words, it's saying maybe get ready to worry about excessive bullishness in this regard, but not yet quite. However, this is these tactical investment advisors, the National Association of Active Investment Managers, weekly equity exposure. This really plunged from leverage long down to a very middling level of exposure. It seems to follow the growth stocks more than anything. It did bounce back.
I like this headline here. Active managers upping equity exposure. This is what happens when prices fall. What happens? People start looking around and they go, now I'm interested in maybe getting back into, let's get some more money back into stocks. It's not a freaking surprise at all. We'll be having a lot of conversations this weekend, I'm sure, about some of the stocks we're looking at, especially in the in the private group. Which, if you have not yet checked that out yet, make sure you check out that coupon code link down below. We just extended it a little bit just for those last stimulus checks to come in. So I thought today was the day, but now somebody's saying Monday. Some stimulus checks are getting delayed to Monday, which is really frustrating. But this coupon code will expire once we get that settled. So check that out. And the pricing goes up after that. But anyway, you get lifetime access to the lectures. You get to meet me in the private live streams, help answer your questions. Let's go ahead and jump for a moment here to let's see what Fox is covering. Let's see if they're covering the border wall again. Oh, who's this?
The book is Unsettled: What Climate Science Tells Us, What It Doesn't, and Why It Matters. And
Okay, climate debate now. All right. Let's since they're not really talking about biz, let's jump away from that for a moment. And let's look and see if there's anything here recent in the top news. It's Friday. Maybe a little bit of a slow news day here. Going to here, tech rises, BlackRock treasuries. No, what's this? Goldman sells $53 million of bankrupt Texas utility claims. No, nothing super exciting here for us to see. Nothing exciting happening at Fox. CNBC is on TV commercial. We've gone through the sticks here. Yeah. Gone through the six. So, hey, folks, I think today we got ourselves a short market close. Appreciate you all being here. It's fun hanging out with you as usual. Go out there and enjoy your weekend. Make sure to always remember, folks, buy the dip. That merch is obviously linked down below, or go to metkevin.com/merch. Get your 2 free stocks with Webull by going to metkevin.com/Webull. Check out the course and the coupon code down below. And folks, we'll see you later.